Good morning, traders. Welcome to Friday of this beautiful week. Make sure to swing over to ssftg.com/brief to grab your morning brief levels. Before we jump on in, as always, we need to check the news and see kind of what's going on today so that we're not taken by surprise by anything. So looking at the news for this morning, we've got our typical Friday stuff, all of the Michigan consumer sentiment and all of the speculative net position stuff. All of those are every Friday. But the one big thing that we do have at 1400, U.S. federal budget, the forecast is negative 430 billion. That will definitely have things moving. Then, of course, at 1300 for the oil side of things, we have the U.S. Baker Hughes total rig count coming out as well. Outside of that, there's not really much else. It's all our typical stuff that you would see on a Friday. So not really a whole lot that we have to worry about from that perspective, other than, you know, I get maybe at 10 o'clock FOMC member Williams is speaking. There's just nothing else going on. So from the news calendar, pretty light and going into a Friday. Don't forget Monday is also a holiday, so extended weekend. A lot of traders are, they're probably going to be looking to early in, early out and enjoy a long weekend. But with that out of the way, let's take a look at some charts for today, being 2/12 of 2021. All right, so the first one up to the list is going to be the NASDAQ, and overall, we've still got this sideways price action going on. The sellers are holding the L5 off of the top. The buyers are holding the L2 at the moment off of the lows. And one notable thing that we are seeing, at least, is that the market's gaining higher lows. Right? It may not be the best higher lows in the world, but it's working on it, and it's definitely a good sign. So if we were looking at it from the perspective of kind of algos, if you will, disregarding this big giant wick at the base, you can see how there's potential for a little bit of a channel going on here, or at least the early signs of a channel. That said, if it is a channel, we're not really coming off of the lows of it, so that doesn't really help right now. But as far as the rising wedge support and that giant wick on the bottom, it's fairly obvious to see that bulls want to get a little bit more to the upside in terms of falling resistance. Unfortunately, it's not too far away, but if the bulls can challenge that area and start cracking through, then we've got a good shot at hopefully finally getting away from this L5 in the way and ramping back up to a new high. Over on the S&P, we have a very similar situation with a really big, gross-looking wedge. Actually, as far as a wedge goes, it looks pretty solid. It's just the price action inside of this is really choppy. We've got the sellers holding off the L5 at the top of the wedge, buyers holding off the L4 at the bottom of the wedge. This big kind of blow off on the bottom seems like, again, the market's kind of ignoring it and going to the next swing, which is right here. And that is where all of the support is coming in. It happens to line up almost perfectly with the L4 and the bottom of rising wedge support. So everything's definitely stacking up to try to get this thing to pop back up towards the highs. And it's got some decent room. In the shorter term, we might have some falling resistance across the highs here. It's pretty obvious that they're showing some response. So the bulls are going to have to make it through there, and if they can, clear sailing up to the highs of the wedge, L5, and then, from there it becomes a bit messy. But at least up to that point, it hopefully won't be too bad. Over on gold, we have, market slamming into a brick wall at the top, 1846 to 1850s. Just put a total lid on the top of gold, and now the market's rotating back lower again. Inside of that area, realistically, as far as volume goes, if we look at the overall top up here, not including this breakdown, it's fairly obvious that a big chunk of volume traded in the 1843s, and that was obviously enough to push the market back lower. So if the market does respect this as selling volume, it more than buying taking profit, but as selling volume coming in as new sellers, if the market can retrace back into that, it's very likely that we see more of that volume coming back in to try to drive the market back lower. The sellers are attempting to put in a lid. This is where they're not going to want to see it break further up. Overall, pretty sideways, and from the perspective of bulls, it's starting to get a little bit cheaper. We're in the L3. We've got a bit of a bear flag to the downside, which the spike in channel that's forming right now would be preferable to see it break higher low, get a little bit more context going on here, because this is still very bear weighted. So if the bulls are going to take over, they have a lot of work to do. And sellers, if they're going to keep this drive going, the next zone of support is going to be down in the 1807.2s, maybe even a little bit further towards the 1800s, that big psychological level. Over on crude oil, we've got a nice little wedge formation, and it appears as though sellers that were stuck earlier on the 7th were able to get out at break even once again. This isn't the first time around. We see all of that volume coming in. And I say sellers getting stuck because all of this ramping to the upside, I'm only counting the profile before the breakout to the upside. So this is only volume that was accumulating at this point in time, which, given the market did this sideways, failed and went higher, the assumption is that that is sellers potentially getting stuck. It might have also been buyers taking profit, but either way, they're sell orders. And we don't know realistically if those are sellers getting in and getting stuck until we get proof later on. Where does the market dip back to? Right into that volume pocket where we kind of hypothesized that sellers were stuck earlier. Well, they were given their chance to get out at break even. Now we can confirm this, or at least add a bit more context, by looking at the volume profile on the drive down, excluding the bull pop after the lows, right? I just want the bear drive lower, and lo and behold, where did all the volume come in? Right into where that previous area of interest was. Now, if we include the volume at the bottom and go to that point a little bit further, then we can see, actually, if we just expand it out, it should be fine, that we've got some pretty decent volume that built up. And when it came back up into this area, sellers will have tried, and it just got dumped on all the way back up to a new high. So the way that this market's moving is demonstrating that this is a break-even test. And now the market's bouncing off of that exact same level again. So the fact that we're seeing this response over and over and over again really shows that if sellers are stuck or thinking they're stuck, they're going to be looking to get out at break even. And what better spot than having a giant volume node right in that exact same location? So swing longs are definitely looking for this area to continue back to the upside and see if it can crack back above 58 and maybe even further. Then next up, we've got the euro, which is consolidating, feeling kind of similar to gold, honestly. It feels like it's hitting its wall, hitting a wall up here and attempting to rotate down. That said, we do have L1 for the buyers, which is just underneath this low, attempting to defend this dip, right? We've got buyers coming in off of the low and looking to cycle back higher, but we haven't seen falling resistance break. We haven't even seen higher highs, higher lows. It's very, very early. The market's still down at the bottom. So this is where accumulation, big hedge fund, etc. type money is going to be buying in and building. But we haven't really seen that extra proof to demonstrate more follow through. So as it stands right now, we're in a little bit of a range. It's definitely at the lows of the range. So as far as a value perspective, this would be considered cheap, assuming that it doesn't break down. If you're looking at this as a range and this is the first attempt down, well, usually the next attempt that goes down fails and it bounces right back up in. So a lot of buyers are going to be hanging out right at this low, right around that 1.21 area. Lots of stuff hanging out around previous structure. Everything is stacking up for one more attempt on the lows, and that's where buyers will likely start getting a lot more interested. Then over on Bitcoin, we've got a bit of consolidation going on ahead of the 48,000 area. We've seen a metric ton of volume traded around 48,000. It's not the first time. And this is an area ahead of that gigantic psychological 50,000 that really seems to be kind of sticking a bit. Buyers are very obviously buying the L1 pullback ahead, but there's not really any structure to support it here. It's just buying aggressively, hoping for a breakout higher. When we're in that type of situation, that's fine, and if it works, that's also fine, but I would really prefer to see it coming off of some form of structure, which we're just not there yet. That would require a bit more of a pullback, at least back to some of this previous range support resistance, back towards the 45,000s. Then it becomes a lot more interesting. Right now, it's just kind of in the middle, and when you're in the middle, it's usually asking for a bit of trouble. We do have some divergences off the highs. There are just some caveats to wanting to go long here that I think stand in the way. Then over on Ethereum, we seem to have an algo wedge, and the reason I call it an algo wedge is because we've got this blow off on the lows, but they're not really paying attention to that swing. And a lot of times that happens when you've got this little bit of a washout low and a move higher, and it's so far detached from the bottom that it's almost impossible to trade without opening up the doors to massive risk. So because of that, what traders and algos and HFTs will utilize is the next swing in the sequence, that higher low that gets things back into alignment. Now, initially, you're never quite sure if they do, but when you start seeing support like this over here, it's obvious that something's going on. Now, you don't necessarily expect it to come back 4 days later and show support there again, but, you know, it is what it is. There's nothing I can do about it, and buyers are definitely demonstrating that it's still there. So as long as buyers are showing that the market wants to try to hold the move up, we're still stuck inside this wedge. Sellers are maintaining resistance off 1800. We've seen a truckload of volume coming in at 1800. So as far as the bulls go on Ethereum, they've got to break above the top, but if they can start cracking back above the 1800s, get into like the 1820s, 25s, start getting back above all of that volume that was holding the market down, that's when they've got the real shot to slap the rocket boosters on. All right, well, that's going to do it for today. Like we always say, stay safe out there, keep those stops in play, and let the winners run. I hope you have a fantastic day. I hope you have a fantastic extended weekend, and we will see you all back on Tuesday. All right, have a good one. We'll talk to y'all later. Thanks.